first of all, contacting you, man, and you willing to come through and you willing to break bread with us. I really do feel passionate about, people in our community. They need to know more about what your expertise is, which is commercial real estate. And I'm gonna let you get off and I'm gonna let you talk. But I think in my opinion, and maybe you'll give me some better advice, or everyone some better advice. But in my opinion, commercial real estate is thinking big. It's really thinking big. It's up there, but a lot of times we feel like we can't achieve that, or it's not even in our minds. But that's why I'm grateful and thankful that you're here and you can debunk that, and we'll see where it goes. We'll really see where it goes, man. If you want to introduce yourself, it's on you.
No, JT, I appreciate it, and thank you for bringing me in, man. This means a lot because I, like you, I believe in getting quality information to our people, especially in areas, of investing, commercial real estate, where it's a big wall for, built so that we don't get in that, at the end of the day. So it's like, man, in order to get up over that wall, man, we got to throw a rope over that. We got to put our hand back down, tie the rope, and bring everybody over with us so we can break through that barrier, man, and so that we can make sure that our people are gamed up and have the quality information, man, to go ahead and make moves in these spaces. And what I find is that we have a lot of ingenuity that directly applies specifically for the commercial real estate industry. I've been in this game since 2003. I started in 2003, doing lease option to buys on apartment buildings. I started my company, Infinity Investments, in 2009. And we're a commercial real estate brokerage and investment firm. Yeah, well, I appreciate that, man. And for people listening, I started in 2009. And that was, it was grimy in 2009. You know what I'm saying? It was in those times.
A lot of people don't know about 2009, though.
They don't know about that, man. Like, if you knew, like, to real estate or stocks or finance in the last 5 to 10 years, that you didn't go through that, storm. Just a very difficult time. You know what I mean? But it was the best time to start a business, especially if you, like, in that industry, right? Because what I saw, properties were selling at 50, 70% on a discount. You know what I mean? Because I was in the game before. So I saw where they was prior to the crash. And then when the market crashed, and it was weird because the property market crashed, stocks, everything crashed, And it wasn't just like stocks over here crashed. It was insurance, everything went down. But what I saw was
everything, right?
Everything. So everything was at a discount. And in my business, what I also saw that the prices was at a discount, but the rents, they came down a little bit, and immediately they went up and doubled and tripled. So what I saw was, hey, look, you can buy these properties at a discount, and now you can make solid income on these properties. And so I started the company, man. And I had a couple of people that was buying properties, and so I was able to sell them. And then we syndicated some properties, put investors together and purchase. And that's what our company does. We broker properties for people, buyers and sellers, but we also will put investors together to go acquire properties, right? And that's really where real wealth is built, is in acquiring investment properties, whether they're commercial or residential, but properties that are going to provide you a long-term stream of income over a period of time. So that's what we all about. And I came from the hood, man. I came from East Oakland, and and I know you're in Miami,
rough, man.
Look, and you know how it is, and y'all, just like us, was really affected by the dope game, the 80s. You know what I'm saying?
I put Drew down on them, man. I had to put Drew down on them.
See that, man.
I had to put Drew down on them.
Hey, man, hey, that flyer you put together was dope, and it made me feel like going back and getting some finger waves up in here.
Yeah,
man. I made some Drew down finger waves and that thing.
Finger waves, man.
Hey, look, it brought me back to that time when I grew up, because that was my area of the 90s when I was coming up in age. Right. That was my time, right? So what I learned from the hood was learning how to think on your toes, how to bob and weave through difficult situations, how to stretch a dollar. I mean, I remember many times, taking bologna sandwiches to school because, look, I didn't have money to buy no lunch. I had to take my bologna sandwiches and then eat that and then go to football practice. You know what I'm saying? I needed something to eat. So it was just that ingenuity taught me something, right? And so when I went to San Jose State University, I went to the Silicon Valley at the height of the .com boom. And I seen the business game and was like, yo, hey, this is legit, because I had never seen so much wealth. You see on TV and you see rappers and everybody and people in the hood that was balling. When I went to San Jose in 2000, I seen real wealth. You know what I'm saying? And I was like, this business thing, this is where it's at. And so that's how I kind of got my start. And I've been blessed to be able to kind of continue through the ups, the downs, and all around. And particularly to have this, not just build a business and build wealth and all that, but have this, kind of mission and vision and heart for our people to get us involved and get content out. So I love what you're doing with your show and with all of your content, is that you're doing that. And that's, I'm honored to be on this, because that's what I'm all about. And that's what I want to, that's like my company vision, not just to do deals and build wealth, but to bring content, quality content to our people, to make sure that we can make the move that's available to us. We can use our skills, our ingenuity, our experiences to this business world to go ahead and build wealth for us now and for the next generation.
Definitely, man. And that's what it's about. Man, you fast forwarding there. All my questions. You done answered. Hey, that's it. It's over now. You done answered all my questions. All right. It's a wrap. Good to meet you. Nah, but definitely, man. That's what we all about. And again, I congratulate you, man, because you made it through that bubble, man. That 2009, and you still grinding. But don't. I think you one of the originals, man. Because if you made it through that era, you really know your stuff. You know what I mean? And it's a beautiful thing, man. Let's start off. Let's start off. I mean, wonderful introduction. Let's start off like this.
Yeah.
For those who don't know, we're gonna take them to 101. What is commercial real estate?
Yeah.
And why commercial real estate?
Yeah. Great question, man. So there's a bunch of different kinds of commercial real estate. So we start off with anything where it's and commercial is called commercial for business enterprise, right? So anything that's an office building, that's a retail. So office where we sit down, and like where I'm at right now, my office, we do professional business services mainly. There typically isn't a direct transaction at an office. However, a direct transaction is going to be retail properties. So these are properties when you go into the store, you purchase something, you go into the restaurant, you buy something to eat, that's retail, right? Anything that's a hotel, that's the hospitality industry, that's commercial enterprise. Warehouses, that's industrial, okay? Churches, special purpose, all these kind of properties are commercial. Now, the unique part about commercial is apartment buildings, because apartment buildings are essentially residential. It's housing, right, for people. However, once you reach 5 units and above, and above, that now is commercial real estate. You know what I mean? And the reason that's commercial real estate is because it requires, once you hit 5 units above, it requires commercial financing, right? And 2 to 4 units, on the other hand, even though that is apartments, is housing dwellings, 2 to 4 units is what's called residential income, still residential. You can get a residential loan. You could even, a lot of people don't know this, but I know there's a lot of education out there now, especially MG, the mortgage guy from the EYL squad. There's a lot of content on house hacking, where you could live in one unit and rent the other ones out. So there's FHA. Yeah, there's FHA loans for 2 to 4 units. But once you get 5 units and above, now it's apartment building. Now, there's also FHA loans for apartment building, but you can't do 3.5% down. That's the only thing. But FHA, Fannie Mae, Freddie Mac, they all make loans on large apartment buildings as well as they do residential. So anything 5 units and above is commercial. Now, why commercial?
Why? Yeah. Yes.
I'll tell you why for me, and then I go for the marketplace, or for y'all, for the people. So I got into the game in 03, right? I was still at school at San Jose State, but I knew, you know, I wanted to be an entrepreneur. I knew I wanted to be in business from the gate. Like I played ball, I played football, and I went to San Jose trying to walk on playing ball. It didn't work out for your boy. I didn't have the speed, right? But I was chasing my dream to play football. And when I got there, I seen this business world, like I was telling you, and I finally figured out that I wanted to get into the real estate game. You know what I'm saying? I was like, okay, I found the business that I wanted to do, right? So most of, you know, real estate starts with houses and residential. So I ordered this course, and you might, you know, I know some of the youngsters out there might not know about this, but you might know about this, JT. It was the no money down, Carlton Sheets, no money down real estate course. And I was up one night, and Carlton Sheets, no money down. He was an infomercial guru, you know what I mean, back in the day, in like the 80s and 90s, in early 2000s.
Right.
He'd been around, right? And so I ordered this course. It's like $200 on the internet. I mean, that was before the $200 on the infomercial. And
right.
The course changed my life. It talked about what I did was I actually read the course. A lot of times, y'all, if you order a course, you got to go through it. The course is not going to magically make you money. You got to read the course. You got to go through the course. So when I did that, what I found was the apartment buildings and commercial real estate made sense for me because it's numbers driven. And I wasn't a great student, you know, but I was good at math. You know, math just made sense for me. It came natural. You know, I wasn't good at English or science or none of that other stuff.
Right.
But math, I was always good at math. It was a natural skill for me, right? So when I gravitated towards that. I was like, well, this makes sense to me because everything is based on the income and expense analysis of a property, and that's how we get the value. That's how we create value. That's how we determine value. That's how we understand it. So for me, I was like, okay, boom, I'm a numbers guy. Let me get into this apartment game. Now, for y'all, for the marketplace, why commercial? Well, this is the big leagues of real estate. You know what I mean? And it's something that you can work your way up to it, but you can start like me. My first deal was a 6-unit apartment building. And what we did on that was a master lease option.
That's still pretty big, though. That's still pretty big,
yeah.
though, Steve.
Yeah, no. I mean, that was it was 6 units, right?
Right.
Now I was in Colorado. My dad lived in Colorado, so I went out there for a summer. We took over the building for $300,000 on a lease option to buy, option to purchase it for $300,000.
Nice.
And it was a true no money down deal. Let me just say it like this: it required some money. It required $1. I had a guy. We sat down. It was old school. We sat down at the coffee table.
Right.
We worked out the deal. Shook hands. And he was like, "All right, all you need is $1 to bind the contract because it has to be some kind of exchange, right?" And so, dude, he was setting this up as this option. And so he asked me for the $1 because he was like, no money down. So I didn't bring no money to the transaction. I literally I'm meeting this man at the little coffee shop where we was at, right? I didn't have $1. He like, I just needed $1.
Right.
Right? Man, I go out to the truck like, yo, Pops, I got the deal worked out. All I need is $1. You know what I mean? And man, he didn't have $1. So he was like, I have $20, but he scraped together 4 quarters in the truck, gave it to me, and I did my first deal. You know what I'm saying? Now, I didn't make money on that deal. We ended up not exercising our option, all of this stuff. But that changed my life because
yes, I can imagine.
What it was, JT, was what I put together was, dang, the info in the course works. And I said, this can actually be done, and this is how you do it, right? And so that changed just my thought process. And I was like, man, I was sold. I was like, I'm in real estate, man. I know this is what I'm in. This is what I'm doing. And in commercial real estate, the creative financing aspect of it is more prevalent than in residential real estate. So that's a big reason, especially now when we have high interest rates. So you can easily get more finance on a home if you have a good profile and borrower credit income. you might have great borrower credit, income, and all that trying to buy a building, but if the rate on that is 6.5%, right, and the building itself produces a 5.5% return, well, that's going to be hard to get financing for. The reason why that's going to be hard to get financing for is because the building, the income from the building is less than the interest rate. So you might have the best credit in the world, but it's going to be very difficult to get financed that way. So the solution is in many ways to have the seller to carry some of the financing. Now, a lot of sellers may not be willing to do that. But to make a deal happen, there's somebody out there willing to do it. And I got to tell you right now.
And that's a perfect segue. That's a perfect segue for my next for something else I want to bring to you, right? So I want to throw group investing versus individual investing, right? And the reason why I say that is because you got two types of people, if that, right? You got one who's like, you know, they'll self-proclaim that they're greedy or they don't want to work with anybody because all the, you know, stress or whatever the case may be. And you got a certain group that's like, hey, let's group it together because that's how we're going to create this big wealth. And at the end, we're going to have something real huge. So, you know, individual versus individual investing versus group investing in commercial real estate. Tell me about that.
Yeah. Now, hey, so that's an amazing question, man. And this is one. So just individual investing where you by yourself go out and buy a property. Pretty straightforward, right? You know what I mean? But commercial real estate requires more money down, about 35 to 40% down on a traditional loan, right? Where in a residential
up to 40 as well?
Up to 40. Now, especially in my area, right? Because where the properties are more expensive. In relationship to income, meaning that the capitalization rate, that's a whole other topic, but that the capitalization rate is the rate of return a building generates. So when those numbers are lower, typically in markets like the Bay Area, probably also like Miami, New York, the bigger cities, LA, Chicago, cap rates are lower than they would be in the middle, in the Midwest or parts of the South, so on and so forth, right? So you have to put more money down to make the income work. And there's a ratio called the debt service coverage ratio, DSCR, the debt service. That's very similar in residential to the debt to income ratio. What that looks at is the net operating income, the net income from the building in relationship to your mortgage payment. So in markets like mine, markets like yours, the numbers are tight. You got to put more money down to make sure the cash flow is more, you know, it's a more comfortable cash flow. It's not so tight. So a lot of times in commercial real estate, you're looking at a building that's like $1 million. In residential, like if it's an owner-occupied house, you can get in with 50. If it's a fourplex and you just buy for investment, you could probably get in with 200. If it's an apartment building, you may have to come in with 350. So what's more typical in commercial real estate than residential is that this concept of group investing, syndications, where more than 1, 2, 3, or 100 investors come together, bring their capital together, usually in the form of like an LLC or a limited partnership. Each person has an interest in that LLC according to typically how much they invest and how the deal is structured. And then they go as a group and buy the property. Now, that happens individually, you know, something that we're doing right now. We've got an 8-unit building in Oakland. We're putting together investors individually. We're going to buy it as individuals. But more on a larger scale is the corporations, the institutions. Man, most buildings that you see, whether it's a skyscraper, a hotel, affordable housing, whatever, is some form of a group investing, either an individual syndication that the company puts together or a fund. And institutions, they invest through funds. They have funds. They invest with other funds. They get money from other funds. So all these pool investors. That's typical in commercial real estate. And it's a great way for people to scale up. Like if you like, hey, man, I want to go and invest in this, but I can't do the 35% down, or I don't want to do the 35% down. You know what I'm saying?
Right.
I maybe want to spread my money up, but I want to go after this deal. I want to be a part of this.
Yeah, I want it.
You know what I mean? So that is how that gets accomplished, man. And that's how all these big buildings get built. And, you know, I mean, I'm sure like in Miami, you driving down South Beach, you see these hotels, you see these amazing buildings and skylines. 9 times out of 10, that's a group investment.
That's a group investment. That's a group, man. Okay, so I hope everyone's just a tad bit more interested in the commercial real estate, hearing about this. And so, keeping up with the stock market as I do. The Feds raised the interest rates yesterday, 20.25 or 25 basis points. So right now it's about 4.75%, right? And with that being said, is commercial real estate really a hedge for inflation? Is it something where you can park your money into? Well, I don't want to go. I don't probably know the terminologies on how you would use that. But my question is it a hedge towards inflation?
Yeah, man. Great question, JT, because, okay, first of all, in general, yes. And I say in general because it depends on how you buy it. And this is something that I learned when I first got in the game. And then this is something that is I literally just had re-emphasized. I was watching, I'm sure, you know, the brothers Earn Your Leisure and everything that they're doing. Right. The largest black developer in the United States, a brother by the name of Don Peoples. And he actually lives, I think, still in Miami. So he was talking about a project that they're doing in New York. It's called the Affirmation Tower. And this is going to be one of the largest buildings in the Western Hemisphere, right? So he was talking about this, and the brother Rashad asked him, well, do you have any like commandments or rules that you stick by for real estate investing? And so what he said was, yeah, number one thing is make your money when you buy. What he means by that is when you buy, the day that you buy that property, you have to see profitability day one. So either it's you buy it, it's already existing building, it's cash flowing day one, or let's say you buy something vacant, right? You estimate your cost to renovate it, estimate the cost for the rents, the expenses, and then you show a profit. Or you can show a profit and you represent that you're buying that property at a discount. First is, like with a lot of what has gone on the last couple of years, I'm going to go buy this property. I'm going to overpay for the property. I'm going to go beat out these people. I'm going to just get this building. I'm not worried about the economics. That's not buying. That's not making money. You just hoping that it keep going up. If you buy it where you making money day one, right?
Okay.
Then commercial real estate is an excellent hedge against inflation because it's a store of value, right? It's a store of value. Now, you talked about interest rates. Let's talk about that for a second because let me just tell you like this, man. A lot of people in the real estate game, and this is, we are brokers. We sell property, we get paid, right? So I would love for the interest rates to be low. I would love for them easy money to keep flowing, right?
But Steve, hold on. That's my question, right? And again, tell me if the question makes sense because if I'm asking it correctly in the real estate market or not, right? So what's the ideal interest rate for the commercial real estate market, right? So I know it fluctuates, but what would be, if it ever gets there, what would be the ideal interest rate for commercial real estate?
Well, great question again, because we're in the 6%, and actually commercial rates are lower than residential right now on average.
Wow.
On the first time, and it's been like that all year since last year. I never experienced that, right? Usually residential is cheaper than commercial. So, it's not necessarily an ideal rate per se, because here's the deal. You can make a lot of money in this environment because the rates are high. Sellers may have to be forced to carry financing. I just closed a deal in November at 5% interest only, seller financing, and that was about a point and a quarter lower than the bank. So that's where the opportunity is. But here is where the optimal sweet spot is where the average capitalization rates, that's the rate of returns for the buildings. That average must be above the average interest rates, right? That's when we're in an ideal scenario. Right now, the average return on buildings is lower than the average interest rates. which is why we've seen this stagnation in our market, that's different than residential. We talk because commercial is all about the return. So returns are lower than the rates. Now, at some point, that's going to have to adjust, and that's what I think is going to be happening. And unfortunately, a lot of people in the real estate industry, right, residential, commercial, whatever, have been saying to people, oh, come February, they're going to lower the rates. They're going to lower the rates. They're going to lower the rates. And first of all, we don't know what they're going to do. They're going to do, there's reasonable expectation.
Right.
We don't know what they're going to do. But based on what they've been doing, I didn't see them lowering the rate at this period of time, because the main thing they're doing is fighting inflation, right? They got to fight this. Inflation is all of our enemy. You know what I mean? So they have to raise these rates. Now, this asset class is, in my opinion, one of the best hedges against inflation, right? And the reason being is because if you do it right, you buy right? And you can get where essentially your return is higher than the rate that you're getting for your money, and you can lock that rate in over a period of time, right? Now you can benefit from some of the inflationary pressures like rent, right? Now again, you got to be careful, because like I'm in the area where we got rent control. I don't know if do they have rent control in Miami?
I'm not sure if they have rent control in city of Miami. I'm not sure if they have that rent. Maybe some places they do, but I'm not 100% sure on that. So
it's pros and cons with rent control. And out here, it's extreme rent control. But so therefore, each building is unique. You might find a building right now. If a building is built after 1993 and 1983, it's exempt. So you're not under rent control, right? And you can get higher rents. Right. You can bump your rents every year, right?
Yeah,
every year. Building, has Section 8 tenants. Section 8 is a subsidy, so you can raise those rents. Now, we still have a rent board. You have to get rental increases approved. You can't just
take
that somebody from 2,000 to 4,000. That ain't
you can't raise that high.
But you're not restricted like the rest of the market. So every building is different, and that's where some of the opportunities come from. But in general, you can get now the rent growth that we think over time we're going to see. Now, there's a little bit of stagnation with rents right now, depending on where you are. Like in apartments in our market, depending on where you are, it's still going strong, right? Retail properties, office properties are stagnant right now. But over time, they, just like everything else, is going to go up in its price, right? So now if we have debt that we locked in at this point, and our returns, because we bought right, are over that debt, and then our returns over time are going up, now we benefit from the inflation.
Right.
We benefit. We win with that.
Well, let me ask you this. Are there some people that kind of like live and die by the inflation, like they're waiting for that peak or that inflation to be lower than specific something in order for them to buy? Are there people like that just live by the rule of inflation? Like, I'm not going to buy it, it goes down.
I think, yes. So answer your question, yes. I think there's always people that have that, hey, and maybe whether it's inflation or interest rates or the market, I think probably it's more like there are people who say, I'm not going to buy at a certain time of the market, right? Give you an example. Last time when it crashed, we really didn't have no inflationary pressures. Remember when the market crashed? I'm talking to some people saying, hey, this crash is different because last couple of times it crashed, we had major inflation. I remember like in the 70s and in the 80s, it was kind of some inflation. They said this time is different. It was all kind of financial. It wasn't really inflation, right?
Right, because of the cause.
Right. But the market cycle is what it is. So some people are like, hey, I will only buy at the absolute bottom, right? And I remember 09, 10, like showing people buildings. I remember I sold an 81 unit building in Oakland for $3.7 million. It had previously sold for 8.1, right? So 8.1, 3.7. I remember showing that building to people who had money. And people were telling me, I would never buy that building. It was in East Oakland. It was tough. Yeah, I don't want to deal with them. The market's never coming back. It's going to keep going down, right? I remember showing people fourplexes in West Oakland, which is West Oakland's like Brooklyn. You know what I mean? In terms, it ain't Brooklyn, but it's like that in terms of it's right across the bridge, San Francisco, like Brooklyn across from Manhattan, and it's been gentrified, right? I remember showing people fourplexes for 150, 197, right? People like, oh no, the police down in the island. That fourplex would be like 1.4, 1.5 right now. You know what I mean? And people were like, we're gonna wait to the after bottom, right? You don't know when it's going to be the absolute peak when it's time to sell, right?
Yeah, who knows? Nobody knows the peak nor the bottom.
Right. So, what Don Peebles gave some great advice. He said he looked at real estate like a clock, right? And 12 o'clock is, let's say, the peak. You know what I mean? And from when it goes around like 1 to 4, you want to be an observer of the market. Or what is it like? From 12 to 3, you be an observer of the market. From 3 to 6, okay, you want to start buying. You know what I mean? 6 to 9, you want to start buying, and 9 to 12, that's when you a seller. You know what I mean? And so he was saying in general, these are like in general, but so you're right. There's people who are going to be like, I'm not going to buy nothing until this inflation is over, or there's people who've been waiting for this opportunity, and then there's most people. Most people do it the opposite way, man. They're gonna buy at the peak because that's when it's exciting. That's when it's publicized. That's when the interest rates are super low. That's when it's easy to get in. But you typically are having to overbid, overpay, right? And so a lot of people, most people buy at that point in time, right? Houses particularly, but also commercial real estate. And then a lot of the masses want to end up selling in that time where people said from like 12 to 3, where you don't want to be necessarily, you don't want to buy because it's going down, but you definitely don't want to be selling at that point in time. That's when everybody's trying to sell. I'm seeing a big increase in people wanting to sell right now. Now, you still can sell properties at that point and have it make sense, right? It would have been ideal if you would have sold from 9 to 12, like I was telling people in 2021 and 2022. But we still can get a property sold when it's down, and it still could make sense for you. It still could make sense for you to buy from that 12 to 3 window when it's going down if you get a screaming deal. If you buy a property, it is valued today in a down market $1 million, but you can buy that property at $800,000. It makes sense to buy that property, even if the market value went from $1 million to $900,000, but you bought it at $800,000. Even though the market value went down, you still got in at a great deal, and you making money. You know what I mean? And so that's why I think if you're gonna be in this game, you stay engaged, but you make wise decisions. You know what I'm saying? And
especially stay engaged. Especially stay engaged with people in the know like yourself. Definitely. And you know, we have I guess we halfway through 7. Let the people know where to find you at if they need to find you, if they need to get in contact with you for information about commercial real estate. Because I know you're not just you may reside in Oakland, but you worldwide.
Man, we international with it. That's the goal, man. You know what I mean?
So with that man, yes sir.
Yeah, we try. That's the goal. My wife is from Ethiopia, and so I went out there.
You don't say, man.
Yeah, man. And hey, first of all, going back to the continent is a you know what I mean, for black folks everywhere, it's something that you got to do. But I think for everyone in business, I think that is the absolute next, boom area is the continent, and particularly in countries like Ethiopia, because they have a very strong infrastructure. That country also has never been colonialized. You know what I'm saying? They've been occupied. They've never been colonialized.
Stop it, Steve, stop it. I just had a conversation last week with a colleague of mine, because I'm on the radio in the morning by the Grace Most High. So my radio colleague, his wife, he went down there in Ethiopia and got a wife too. So I'm like, why? Asking, and he's like, listen, that's the only country that hasn't been conquered in Africa. So, it's more pure to everything, because every country in Africa has been conquered except Ethiopia.
Yeah.
Man. And got a wife down there as well. Wow.
Hey, man, and it's a great people. It's a great people. And so, but when I went down there, there's more buildings in Addis Ababa than there is in Oakland by far, maybe even in San Francisco. And taller buildings and the infrastructure, the economy. I mean, that's where growth is. So I want to grow international. But look, y'all can find me on IG, Infinity Investments on IG, or YouTube. There's 3 places: IG, Infinity Investments on IG, Infinity Investments on YouTube. Now on YouTube, there's a couple other. There's actually Infinity Investments in Egypt. I just found that out. They got Infinity Investments in Egypt, which was dope. That was pretty dope to see that. But then there's an Infinity Investing, which is another company. But if you put Steve Peterson or Infinity Investments on YouTube, you're going to find us. And if you definitely go to LinkedIn, Steve Peterson or Infinity Investments, you're going to find us on LinkedIn. That's where we got our biggest network. So any one of those networks, man, tap in with your boy, man, be a part of this. Because one thing that we do, we always going to give content. We're going to keep giving this content, man. You know what I'm saying? And it's you know, that's hey, I've heard like in the streets, like a lot of people say the game is to be sold, not to be told. Right? That's what they say.
Right.
But look, the way I look at it like this, I give away a lot of free advice, right? And a lot of advice that my competitors could take, people could take my information to go. My whole thing is this. I live by the principle you reap what you sow. You know what I'm saying? So I'm a sow these seeds, man, especially to the community, especially the people who trying to advance, especially the people who like-minded. And what I found as a business principle, man, it has came back to me tenfold, man. But a lot of the business that I've done has been with people who either watched my content, came to one of my meetings, heard me speak, and was like, yo, you know, and maybe have I lost some business? I'm probably sure I lost some business. But what I got back from it and more, man. And you know what I'm saying? And it's just, it go with the principle, because we going to keep reaping, man. We gonna keep reaping and keep sowing. Especially with brothers like yourself, man, just collabing, because this is you. This is what you gotta do.
No, man, you're doing great, man. And listen, I got so much I want to just converse with you. Let's speed up this conversation, because I know you gotta go to the game. Those two gotta go to the
practice, man. I practice. I coach. So I coach football. This is our off season.
Man, you doing big. You doing big for the community, man.
Oh man, I'm in there too, man. That's my
man.
life. And this is off season. But let me tell you how this sports world got so crazy. Everybody do all year. Hoop, baseball. So football, we play padded ball, but then in this time it was called 7-on-7. So it's where we just throw the ball. You know what I mean? I know it's big. It's big in Florida, man. Huge in Florida.
Yes. The girls too.
Okay,
7-on-7.
So crazy, and so it's great, man. So I get out there and coach, and it allows. I'm coaching football, but with my boys and the girls, like my girls, they cheer. So everybody who's around me, I'm always talking business. I'm always mentioning that to them. I'm always planting that seed within them, so that and I teach this. My program is discipline, honor, and respect. I'm teaching the boys discipline, honor, and respect through the game of football, so that you can be a better football player, but more importantly, that you can be a better young man, and you can learn how to. Learn how to become a man, learn how to start a business, learn how to raise a family, how to love a wife, do these things that we need in our community. And that's the game of football helps you to teach and learn that, because it's full contact, man. And it's one thing, like in business, you're gonna catch one, you're gonna get caught.
You go, no matter if it's 7-on-7 or what.
Yeah, you're gonna catch one, and so it's about getting back up. It's about getting back up. So that's the game of football. So but I digress, man. I know you got some more questions, and this is great. So let's.
Let me ask you this, right? And tell me if it makes sense. Tell me if it makes sense. So what would be if we acquire a property, what would be a good amount of years before we would see profit? Would it be a good investment if we get a property and it only takes us 5 years to see return or return on our investment? 7, 9, like in the space of the commercial real estate, we talking big numbers a lot of times. If we invest in it, what would be the ideal amount of years? Or are we looking at that or no? Or that's not what we look at, or you tell me what's going on?
No, you definitely looking at that. And the general answer, it depends, and it depends on a few factors. Okay. If you're buying a property that's already occupied, right, and it's already got tenants in, you're buying it based on the income you're buying it, you want to see profit that year. And profit, what I mean, from the income. So there's multiple different ways we make money in real estate. The first way is through the income and expenses of the building. So the building is going to generate rents. You're going to have to pay your taxes, insurance, management, maintenance, all those things. That's your net operating income. The principal, like Don people say, is make your money going in. So that net operating income should be enough to pay for your debt service. Debt service is a fancy word for mortgage payments. And if that income pays for your mortgage payments, there should be something left over. That's called cash flow, right? And that's your initial yield. That could be 1% on your money. It could be, 10% on money. If it's 1%, it's profitable. You know what I mean? Now, 1% is not the best, but it depends on where you at. Like in the Bay, if you're getting between 5 and 7, you're doing good. You know what I'm saying? In some places, like in the Midwest, if you ain't getting 10, you're not doing good. So every area is different, but you want to be able to make income the first year. Now, if it is a value add, a renovation, development, that's going to take time, because I say we're buying a property right now, right? It's vacant. We got to come in and renovate it. Renovation is going to take 6 months, 6 to 9 months roughly.
Renovate it, maybe.
Yep. And so let's say when you get something that's vacant, there's no rent coming in, but we want to renovate it and get the rents coming in ASAP, right? And so that particular deal will start throwing cash flow profits from month 12 to month 18th, in that second year, in the first quarter of that second year, because we're renovating it, we're doing it, it's completely vacant, right? A development deal. Say you want to build an affordable housing, you want to build a fourplex, you want to build an office. That's going to take more time, right? However, you get what's called development fees. If you watch Earn Your Leisure, they've done a couple that with Don Peoples, and there was another brother, I'm going to say Craig, I forget his last name, but he's a big affordable housing developer. He talked about they asked him, how do you make money on this? It takes 5 years to build it, right? Each phase of the development, they earn what's called a development fee, right? And so that fee in development might not happen until year 2 or 3 or whatever. But so those developments are the ones that take the longest. Renovation, value adds. You want to start seeing something after the first year. You know what I mean? If it's taking longer than that, it's like, man, it's tough. If you're buying in place, so you buying a property because it's cash flowing, you say, I want to purchase for income, right? You should be looking at making income that first year. Now, what I suggest you do is before you start taking money out of that yield, you might make a profit, but before you take money out of it, make sure you have at least 6 months of operating expenses in your reserves. 3 to 6 months of your operating expenses in reserves, right? So like, let's say, it costs $100,000 a year to run a building, right? So that's 50 a year is 6 months. So you want to have 25 to 50 in reserve somewhere before you really start taking the cash out. Now, that's just a general number. You may want to say, hey, I got 10%. But you need to have some amount, because let's say the hot water heater go out, or let's just say the roof cave in. You may have if you have insurance, right, you're going to have to pay deductible. That deductibles usually start at $5,000. Now, in your area, in Florida, insurance is typically a lot higher. You know what I mean? Like we in California, most people don't even have earthquake insurance because it's so expensive, right? I know in Florida, my sister lives in Cape Coral, and she was telling me they had the hurricane come through there, right? And she was telling me about the insurance, and she was just like, man, it's about to be triple what it used to be. You know what I mean? And I was like, man, that sounds like they sticking, but part of it is they had, it was a major hurricane in the area. It is that risk, right? So that cost, if that was to hit you, you want to have a cushion for it. This is all I'm saying. You want to have, that cushion, but you want to make money as soon as you can. And you can't do that.
You mean to tell me I come sit down with you, we trying to make a deal, maybe perhaps you advising me, if it's looking like it's not going to make me money in about 3 years, 4 years, you're telling me no, it's not a good deal.
Well, I mean, if it's a development, maybe, but outside of that, if it's a property we're going to buy, let's say it was something where it's half vacant, right?
Right.
And we got to roll our sleeve up and make some money, right?
Right.
Yeah, we should be able, within 3 years, we should be able to turn the property and generate income profit. You know what I'm saying?
Okay.
Absolutely.
Okay. So listen, I see I'm copying you or you copying me. You got the poster in the back, picture in the back, you know. So I see Ray Charles back there, man. So I want to ask you this.
Yeah.
As a buyer, what do I need to be Ray Charles to, right? So what do I need to be blind to, you know, ignore? What do I need to be Ray Charles to? And as a seller, what do I need to be Ray Charles to? So as a buyer in the markets you're in, what do I need to be Ray Charles to? As a seller, what do I need to be Ray Charles?
That's, man, again, excellent question, bro. I mean, I think that the first thing is don't be blind to all the mass media words, you know, or mass media narratives. You know what I mean? When I say mass, stop putting brothers like EYM. That's not, to me, the mass media. You know what I'm saying? The CNBCs and all of this stuff. Now, I'm not talking stocks and all that stuff, but just the mass information is packaged together and delivered to the masses in a certain way on purpose. You know, whatever their purpose is.
Understood.
But we know how it works. Like, we're messaging things, and when we do something, we have a purpose and a message when we put something out there, right? So what I'm saying is, you want to be blind to the fact of all the mass information. Number one, you know, so the counter to that, you want to get specific information. You know what I'm saying? If you're in commercial real estate, residential real estate, let's say you're in stock, whatever it is, you can go on YouTube or you can go on IG. You can find brothers like you can find brothers like me, you can find sisters that's out there, you can find other people that have a specialty in what you're trying to learn. Soak that up. Don't get the mass information. The second thing you need to be blind to is people who don't know nothing about what you're trying to do. Because those are the people, even if it's people who love you, right? Let's say you're trying to get into stocks and your mama, she loves you, but she don't want her baby to take no losses. You know what I'm saying? My baby, no, I don't do that. You know what I mean? Or your pops he love you, but like he only know one way. You know what I mean? He only know, hey man, he worked at Ford, he put his money in his pension. Man, don't you day trading? No, don't do that, son. Don't do that. You buying real estate? No, don't do that. You starting a company? Don't do that. You can't listen to those people that is not, you know, doing what you're trying to do. You know what I mean? Because even if they love you and they have the best intentions, they don't have an understanding for what you're trying to do. You know what I'm saying? Because they don't do it. They don't have that interest. You have to get information from people who are doing or have done what you're trying to do. Right? And now you can get quality information that you can use. There are some times where you need to heed a warning. You know what I'm saying? But you can't heed a warning from somebody who don't know what they're talking about. Like, if it's the weather, it's a hurricane coming. I'm not finna listen to the sports broadcaster breaking down the weather. I need to go to the weather channel. I need to hear from the weather people. Okay, what's my storm? The winter's coming up. I'm not listening to Stephen A. talking about it's a hurricane. You know what I'm saying? And it's 30 knots west. You know what I mean? Because that's not his specialty. You know what I mean? That's not what he do. We need to listen to people who have understanding, or that is in that particular area. Now, if you're a seller, first of all, you need to be right now blind to yesterday's market. Be blind to 2021. Be blind to the past, because it ain't today. You know what I'm saying? You have to deal with reality. Now, I'm not saying don't disregard your values. Don't miss out on what you know, right? That never changes. Principles are timeless, you know what I mean? But we in a different environment than 2 years ago, even than last year, you know what I mean? You have to be able to meet the market. If you're going to sell a property, you can sell a property today, but you have to meet the market. The buyer on the other side, they're not going to just overbid your property because they feel like it. They're not going to just overbid your property because they got 2% money. They don't got 2% money. And there may be instances like in my market, my sister-in-law is trying to buy a house right now. One of our agents is helping her and made an offer on a property, and that property went above the listing price, right? But that because it was priced $100,000 below the average. You know what I mean? It didn't go above the average like it was a year or 2 years ago. You know what I'm saying? That agent had a strategy to get the property sold quick, and they did. But that they didn't say the property is $750. We're gonna list it for $850. They said the property is $750. We're gonna list it for $650 and see what it do. You know, You can't, and in commercial particularly, you cannot overprice properties because investors are only concerned with making a profit, building wealth, making income, or if it's a business, occupying that place for their business, and where they have a cost of money that has jumped dramatically, so they're not going to overpay for nothing. So you have to be blind to what you was able to get a year ago. You know what I mean? And what your cousin and them says you should be able to get. Or if you, that's $1 million property, man.
Right.
You know what I mean? You need to dial
Right.
into what's going on and what's real today.
Right now. Yeah, I know commercial real estate is all about them. It's all about those numbers. You just can't pick a number and say, I'm selling it for this. No, you gotta show the numbers and make it make sense.
Yeah.
Listen, Steve, man, man, hey, let me tell you something. I appreciate you, man, because it's brothers like you that give the extra mile, that don't mind giving the extra mile. Listen, for all those who haven't caught everything, we're going to post it on our YouTube. We're going to let you know. But I really, truly appreciate you, man. And I want to continue this, man. I want to continue, not next Thursday, but maybe next Thursday, man. Continue this because I appreciate the hour that you've given just to educate us, just to break bread. And you know, I'm telling you, they need to tap in and reach out. If you don't live in Oakland, still reach out to your boy, Steven Peterson, man. This man, and I think I have many more questions, but this man goes out to the community and broadcasts and publicize what's for sale, what's going on. We don't find too many people doing that. Listen, you may be raised in the city. You won't even go in your city and tell the people, this is what's for sale, tap in with me, this is going for this. But this man does, man. So I want to shout out to you. Big up to you, man. Before we leave, though, I got one last question that I think is real good. Yeah, man. Commercial. What's the best commercial real estate property to have? Again, I gotta say it because I want to know. We want to know. It's meaningful. What's the best commercial real estate property to have?
Well, I'm gonna tell you like this. I'm gonna say apartment buildings because I'm biased because I love apartments. I started in apartments. You know what I mean? It's a lot of people in commercial real estate call it residential, and that's incorrect. It's multifamily. That is correct because it's 5 units and above.
Okay.
If it's 5 units and above, then you gotta get a commercial loan. I just think that is the #1 asset class. However, give you something hard to get in. It's competitive. Like in Oakland and places like here, we got very stringent rules. Another place to think about where you might be able to find a deal or get industrial properties. Warehouse property is on fire because of the internet. You know what I'm saying? Because of shipping and receiving and all of what that whole industry, everything was going on. The supply chain issues those issues are requiring more and more companies to set up warehouses here in the United States, right? Cannabis is huge because I think it's legal in 38 states now. Most cannabis, it's going to be grown within the confines of a place, right? So it can be secured. So industrial real estate, also most industrial properties, also not most, but maybe a lot of them can also be converted to apartment, can be converted to other uses, can be converted. A lot of sports companies, gyms. So industrial real estate, a little bit harder to get into. But if you can do it, look at that. I'm always saying apartments, man. I'm an apartment guy. I believe it. You know what I'm saying? So apartments is my favorite. #2 would be industrial warehouses.
Love it, man. Appreciate you so much, Steve, man. Appreciate this time. Shout out to everyone who's on this live. You guys are the real champs. You know, again, I stress, you know, tap in with Steve, man. You know, tap in whatever any questions, you can consult with him. You know, you can find him easily to be found. Tap in with him. You know what I mean? Tap in with him for the investments. Tap in with Jeff Investments for the investments as well. Hey, we're doing this, man. We're doing this for y'all. Shout out to y'all, man. And shout out to your platform. Shout out to your company. Shout out to all the accomplishments you have done. And hopefully we do this again. We got to do this again and continue this again.
I'm down, bro. Thank you, bro.
That's what's up.
For the culture and for the people. Man, your swag is unbelievable, and I'm honored to be on here. Anytime you need me, just holler at me, man. Let's do it.
Thank you so much, man. Blessed, man. You have a blessed one. Everybody out here have a blessed one, man. We appreciate y'all, man. 10,000. Y'all have a blessed night, safe night, man. Hey, we love y'all.